Okay, so I think we can begin. For those of you who are new here, I'm just going to introduce myself and tell you a little bit about TFX. So my name is Deborah. I am the head of customer success at TFX. And we are really excited to have you join us today as we dive into some common tax questions and we review tax deadlines and also share how TFX can make tax filing easy and stress-free for you. I mean, that's really our goal. So whether you are a US expat or like many of you, you're based in the US, our team of experts is here to help you navigate the tax season with confidence. We assist all our US taxpayers, both abroad and within the US. So very quickly, let me just introduce TFX for those of you who are new to us. TFX is a top-rated tax service. We're trusted by over 50,000 clients worldwide. So I'm not just saying that because I work for TFX. We really are trusted. You can see this by our reviews and our very happy clients. Our team consists of 80 plus experienced CPAs and EAs, many with over 20 years of expertise in handling both US and expat tax returns. So you are really in good hands. We specialize in optimizing your tax filings, ensuring you get the maximum credits and deductions possible while making the entire process smooth and stress-free. So just to introduce our expert CPA that we have lined up today, when we've really got a special session. We've got Andrew Coleman joining us today. He is a qualified specialist. He'll be answering some of the most common questions we receive from expats and discussing some really important information that you may need, some burning questions that you have. Andrew has about 15 years of experience working with expats, so really well versed when it comes to expat tax and tax planning. He for sure knows how to deal with your taxes and will ensure that you receive your maximum tax benefits possible. After Andrew has taken us through a presentation, he'll take your live questions, so please feel free to start dropping them in the chat. Also, our incredibly skilled and really highly experienced CPAs, Reed and David, are in the chat throughout the session. So they'll be assisting you in real time. Any questions that you have, they can assist in answering that. Also, if you have any questions regarding our process, we've got Dev who is joining us. She is one of our customer support experts and she'll address any process related questions. But that's not all. Please stay tuned because we'll also be giving away exclusive promo codes to help you save on tax preparation with TFX. So very exciting agenda planned for today. So Andrew, I'm going to hand over to you.
Okay, thank you, Deborah. Thank you very much for the introduction. So,
You're welcome.
hi everyone. Hope you're all doing well. Yeah, so like Deborah said, we're going to spend just a few moments to talk about some just basic fundamental things on expat for taxes. So here's the agenda that we'll talk about: general filing requirements, and we'll talk about just the foreign tax credit and the foreign earned income exclusion. And we'll talk a little bit about IRAs when you're living abroad as an expat. It's a common question that comes up, whether you can contribute to an IRA. There's also about totalization agreements that we'll get into, and the importance of that on social taxes. And then we'll talk about deadlines. Of course, there's always tax deadlines. So that's important to know. And then we'll just get into the Q&A after that. So we'll just spend a few minutes to get through some slides just to give you some basics, and then we'll have our Q&A. So just a reminder about general filing requirements. So in general, the next slide will show the minimal income thresholds. This is the standard deduction essentially. So if you're single and you have $14,600 of income, then you technically need to file a tax return. And those figures are for 2024. So you'll see head of households a little bit more, married filing jointly a little bit more at 29,000. But then you'll notice one kind of unusual item: married filing separately is $5, and that is not a typo. That's $5. So when you are, it can be common that if you are married to a non-resident alien spouse, then your filing threshold is $5. So it is common to have that threshold if you're married and living abroad. So yeah, these are just some general requirements. There can be other reasons that you would want to file a tax return. Could be like a credit, like a refund. You know, there's other rules around filing thresholds as well, but these are just a general filing thresholds. So whether you're living abroad or living in the US, these are the same. So general filing obligations, yeah. So in general, you know, when you live abroad, and we'll get into it on the next few slides in a second, but there can be benefits for people living outside the US, and I'll get through that when we talk about the child tax credit or the foreign tax credit versus the foreign earned income exclusion. So those are kind of like on the earned income. We'll talk about those. And there's another area that we always are constantly dealing with, tax treaty claims. So, you know, it's common that most countries have a tax treaty, not all, but most countries have a tax treaty for ensuring that you're not paying income taxes twice on the same income. So those treaties are really important, and we will take care of all of that for you when we're preparing the tax return, because we have to know that, look into the, you know, research that. What is the article say about a certain type of income? So the tax treaty is really important benefits to make sure that you have as an expat. And then also one thing to think about, not only on the tax return side, the income tax return side, there's also these acronyms that you see in this slide. They're called FATCA and FBAR. And I'll get into those a little bit in more detail, but generally these acronyms stand for, they're really focused on getting the balances of your non-US accounts, your non-US assets. And so the IRS wants to know, you know, how much you have outside the US. And the FBAR has been around for a long time, since 60s or 70s. The FATCA came into play in about 2010. So it's something that FATCA really isn't much different than the FBAR, other than it's just where it's filed. But I'll get into those details and as we go along in these next few slides. So the FBAR reporting requirements, this is the FBAR, so it's reported separately from your income tax return. And we will take care of all of the filing for you with the US Treasury Department. But this is a report, a foreign bank account report, and it basically is capturing all of your non-US bank accounts, pension accounts, and securities accounts. So brokerage accounts, if you have a brokerage account in Spain or in the UK, and you need to include that on your FBAR. Or if you have for example, a pension account that your employer is contributing to, then you need to report that pension account or that retirement account on the FBAR. And there's always usually thresholds with these things. So in the FBAR, there's a $10,000 threshold. So anytime that the total of your accounts, not one account, but the total across all of your accounts, the highest balance in all the accounts is more than $10,000, you need to file the FBAR. So yeah, that's the FBAR. This the next one is the FATCA reporting requirements. This is basically a form 8938. It is filed with your with your 1040, your U.S. tax return. So it's slightly different in that the FBAR is filed separately, but this FATCA reporting requirement, this FATCA form is Form 8938, and it's filed with your tax return. And some of you might be familiar with just, you know, some banks, if you're already living abroad, and a foreign bank might be asking you questions about, are you a U.S. citizen? And, you know, a lot of information from you. Well, they have to report to the IRS all of your bank account information. But we, the tax return, we have to report that as well. So it's kind of like a dual system of checks and balances, that the like a bank in Spain that has your accounts, they're sending that information to the IRS. And then as well, for your tax return, that what we prepare for you, this information is included in your tax return. So if you're living in the US, there's thresholds a little bit lower than when you're living abroad. So if you're living in the US, this FATCA form is, you can see on the slide there, if you're single or if you're married, filing jointly. So there's, yeah, smaller thresholds when you're single, and then married filing jointly when there'll be over 100,000 at year end, or if it's 150,000 anytime during the year. So yeah, that's if you're living in the US. So if, yeah, that threshold can be met. Yeah, if you're single and you have more than 50,000 at year end. And then if you are living outside the US, the thresholds are higher. So if you're single and at year end, the threshold is 200,000, and if anytime during the year, it's the threshold is 300,000. And then if you're married filing jointly, the threshold is even higher at year end, and then 600,000 at any time during the year. So yeah, just various thresholds, and we'll take care of all of the you know, determination of whether you need to file it, and you'll see it in the engagement letter. If you need that form, it will be apparent, that it'll be clear that you'll need to file that form. So yeah, and yeah, so this one other topic I wanted to mention was the streamline procedure. So if this is a procedure used for U.S. citizens or green card holders who have lived abroad and has generally never filed a U.S. tax return, mostly because they didn't know that they had to file a tax return. So this streamlined procedure is a really good program. It's kind of like an amnesty program to get caught up with your U.S. tax compliance. And it's basically 3 years of overdue tax returns. And then it's 6 years of FBARs. And then there's a certification letter. It's basically explaining, when all of this is mailed into the IRS, this letter, it kind of is explaining the background of your personal story. When did you move abroad? Have you been living abroad for your whole life? And this is a chance for you to describe to the, just describe to the IRS why you haven't filed. And yeah, this streamlined procedure really is important, because the whole purpose is that the general purpose is to get you caught up, but it's also to make sure that to help you mitigate penalties on unfiled tax returns and unfiled FBARs. So there can be significant penalties if you fail to file an FBAR. Yeah, so they publicize penalties for late tax payments, late FBARs. But the streamlined procedure is really in place to the whole purpose of that. IRS is giving you this chance to get in line, get in compliance with the US tax filing, and they're going to take away penalties. If you owe taxes, then you would still have to pay some interest on any unpaid taxes from the due date of that tax liability. But that's a really good program. We have a lot of clients that use that program, and we have a lot of success with that program. So definitely look into the more information in that QR code, and yeah, if you feel like you might need to file under that program, we can certainly help you, and we process a lot of those. So yeah, one area just to kind of talk about basics of when these are the kind of common things to see and ideas that when you are living abroad. And I'll focus mostly on just kind of this idea of like earned income right now. Obviously, there's other types of income that you can have, passive income, like interest and dividends and capital gains, or retirement distributions. But just on the basics of the foreign tax, the FTC means foreign tax credit. So we use these acronyms, but yeah, just to explain what is FTC. So foreign tax credit. So this type of so if you have earned income, this type of system is in place to ensure that you're not paying taxes twice on the same income. And it's been around for a long time. It's basically like the slide states here, actual income tax paid to another country can offset your US income tax on that same income. So, and this does not include real estate and personal property taxes. This is income taxes. So if you have a foreign employer, you're working in Spain, you work for a Spanish company and you're a US citizen, you get a salary and there's income tax withholding on your monthly paycheck. That withholding can be used as a foreign tax credit. And we'll take care of all of the, getting it into your return, making sure it's calculated correctly, making sure it's allocated correctly. So this is, basically it's just kind of if you think just simply about your, like an example of earned income, that foreign tax credit will help to offset your US tax liability. I guess what the next slide here is talking about the foreign earned income exclusion, this FEIE. And if you're familiar with this is similar in nature. It's similar in nature to the foreign tax credit, where you're attempting to minimize double taxation on earned income. So the foreign tax credit works a little bit differently, but this foreign earned income exclusion, basically you're allowed up to $126,000 to exclude. It doesn't mean that you don't have to file the tax return. A lot of people make that assumption. They jump to that conclusion that, okay, my income is 50,000. I use the foreign earned income exclusion, or I have less than 126. I don't need to file a tax return. You still have to file a tax return, but you do get to exclude the income. You have to report the income, and then you have to get the exclusion. And there's different ways to qualify for it. You can be living abroad, for physically present abroad, So it's under the physical presence test. If in a, let's say, for example, in a calendar year, you can't, so there's a, basically need to be abroad for 330 days. So that's a physical presence test. But then there's also a bona fide residence test. And bona fide residence test is really that you're established where you live, you're paying taxes, there's numerous factors involved, and we'll take care of assessing all of that for you on your tax return. What is basically giving you a better, higher exclusion amount. So that really is our job, to make sure that not only do you get the foreign earned income exclusion, but we're optimizing in your situation. Does it make sense for you to use the foreign earned income exclusion? Or sometimes it doesn't always make sense to do that. Sometimes you want to use the foreign tax credit system instead. And in this slide, it talks about optimization with the child tax credits, retirement contributions. So a lot of times the foreign tax credit system allows if you're paying taxes in the jurisdiction where you live, a lot of times, if it doesn't create a tax liability, there's really good benefits to using the foreign tax credit system. So, but we will of course be involved, and we will take care of that for you. We will communicate that with you. What makes sense for you? What is the best situation for you? So that's our job, is to kind of take care of all that for you. We're just here to explain what are your options, so that you're aware of what is in your tax return. Yeah, so I think there's this last line item on this slide. Yeah, if there was maybe it's, if somebody was asking about it, if not used in a year, cannot use for 5 years. There are some strict rules with the foreign earned income exclusion, that if you take it away, that there's a certain time frame that you can't use it again. So this is really important. I'm saying you have options, but there is really an important step in the process when you can't just do a yo-yo back and forth each year. There is a system, and there are rules in place set forth by the IRS that you can't do 1 year foreign tax credit, 1 year foreign. There are rules in place, but we always communicate that, and we will take care of all that for you when we're preparing your return. So yeah, IRAs for those living abroad. I think if we go to the next slide, this can be a common question. I think what I would say, if somebody has a question, we can of course get into it. But with regards to IRAs, just in general, for you to know, it is possible when you're living abroad that you can have an IRA set up and you can make contributions. What is tricky, though, is there are more strict requirements, especially when you're using the foreign earned income exclusion. So what we advise with our clients, if you're new to preparing U.S. taxes or filing a tax return, what we always like for our clients in our situation, when you are a new expat, you do have some time to make contributions to an IRA for the current year. You have until the next year, until April 15th. So for example, I'll take 2025 as an example. If you think about the filing of the 2025 U.S. tax return, that process is done in early 2026. We advise our clients to wait until we've prepared a tax return draft in order to kind of get all your information in the return, look at all your income, look at all your expenses, and then we make a decision because you have time. Then we make a decision about, hey, here's what you can do. So we'll advise you, here's a Roth IRA contribution amount that you can make. Here's a traditional IRA contribution amount. So you have that time, that window from January 1st, 2020, in my example, 2026 to April 15th, 2026, to think about that IRA contribution for the 2025 tax year, if that makes sense. So there's a reason to kind of, yeah, you don't want to make early contributions IRA. If you do, there's consequences to that, and if you need to remove an excess contribution. So always advisable that you wait until we prepare the return, and then we can advise, hey, this is the amount you can make, or here you can or you can't. Yeah, so on this slide, backdoor Roths, I think this is a common, it does tend to pop up when you, maybe I won't go into details if it's maybe too detailed for this presentation. But if somebody has a question about it, a backdoor Roth, just because it's on the slide, I'll just, it's sometimes you're in a position with your income being so high that you can't make a Roth IRA contribution. So there's mechanisms in place where you can make an IRA contribution, and then you can do a conversion, or basically a conversion into a Roth. So we would this is kind of more of a detailed, and can get it pretty technical. So I would say we don't need to go into further details, but a backdoor Roth is one option available for expats. What else? Yeah, totalization agreements. This is not at all the same as a tax treaty, but a totalization agreement is, many countries have this, not all, and fewer countries do have this than the tax treaty countries. But a totalization agreement is basically eliminating dual social taxes. So if you're self-employed, living abroad, and you live in a country where there's a totalization agreement, that totalization agreement is there in place to ensure that you're not paying self-employment taxes twice on the same income in two different jurisdictions. So we'll take care of all the checking that for you. Is there a totalization agreement or not? That's an important part, especially if you're self-employed. And when you're self-employed abroad, what does that mean? That can mean that you are basically, you're not an employee. So it's all types of income where if you're living in Spain and you receive a 1099 from a US company, you're self-employed, or you're working as a contractor for a Spanish company, you're self-employed as a US citizen, and you're potentially subject to this Social Security taxes. So or you have an LLC in the US and it's disregarded, single member LLC, you're living abroad. The totalization agreement really is an important part of making sure you're not paying social taxes twice on the same income. But again, not all countries have that. So it's an important part of the return process, especially if you're self-employed. But we'll take care of all of that and background and all that analysis for you to ensure that you do get those benefits. Because there's definitely required statements in your tax return that you need to have. There's documents in case you're audited by the IRS. The IRS asks for certain information. If you have a benefit on your return, they want to see that. So we'll advise you on all that. Yeah. And yeah, filing deadlines, these are always deadlines thinking about when you're an expat. So the first deadline is, maybe everybody's familiar with, is April 15th. The next deadline is June 15th. As an expat, you get a 2-month automatic extension to file the tax return. So that means that right now, if you're living abroad, you have until June 16th to file the tax return. And if you don't think you'll manage to file the tax return, you just request an extension in our account, and then we'll take care of all that for you so that you're good to go until October 15th. So the October 15th is the extended deadline. Yeah, so if you want to use that QR code, we'll take care of all that, and yeah, we'll get you taken care of until October 15th with your extension. Yeah. Anything else?
Andrew, that was a lot of information to take in, but really great, lots of great, valuable insights. So thank you very much. And I can see the nuances of American taxes for expats is really overwhelming. So I'm really glad that nobody here has to navigate this by themselves. They have experts like you that can assist them with their tax filing. So that's really fantastic. I'm so excited for you guys. Andrew shared our QR code where you can sign up. If you want to take that next step, we're offering a $50 discount for all our webinar attendees. So if you sign up with TFX, you can do it by scanning the QR code on the screen right now, and then follow the next steps, which are just completing your tax questionnaire. You'll get an engagement letter, and once that's signed, we do the rest for you. So you'll be able to engage with a CPA, a qualified CPA like Andrew, who'll be able to assist you and help you navigate this world of expat tax. So lucky for you. So we're going to move on now to our Q&A session with Andrew, and he'll be answering your tax questions live. If we don't get to your question during the webinar, don't worry, we'll follow up with an email after this, and we'll answer any questions that you have through that email that we send you. So please, if your question is not answered, if you asked a question during registration, please look out for that email. We will be sending it to you within the next day or two. So, we will answer. Okay, so Andrew, Reed, and David have been quite busy chatting away to clients, answering some questions. So you can go ahead and answer a few questions live now.
Okay. So the first one, just that I'm reading here, just so I understand, if I'm a US born citizen and I have never worked or had any income from the US, no US residence, no US ties, and have been living, working, and paying taxes in Spain, do I still have to pay taxes in the US? Well, Manuela, what I can say is just it's a great question. You still have to file a US tax return. So if you have income from a foreign employer, with no US ties, you're not receiving income from a US source, you still need to file and declare your income on the US tax return. Whether you pay taxes in the US really depends on your unique situation. So it really depends on, what types of income you have. Do you have certain types of passive income, or do you have untaxed income, for example, in Spain? So to answer your question, you still need to file a tax return when you are working abroad and paying taxes in Spain. It doesn't always mean that you're gonna pay taxes on the U.S. tax return, that whether you pay taxes really just depends on your situation. The next question is, I hope that answered your question. Kathleen, I want to open a French bank account. Can I? Do I have to pay French taxes on savings when I have not moved to France? Once I move to France, then do I pay taxes on the bank account savings? I'm in the US and a US citizen. Okay, Kathleen, great question. In general, to answer your first question, yes, you can open up a French bank account. Nothing prohibiting you from opening up a bank account from just being a US person. Whether there's rules for in France, for a certain bank, maybe there are rules, but you can, as a US person, US citizen living in the US currently, and you want to open up a bank account in France, you can do that. Do I have to pay French taxes on savings? If you have questions about French taxes, we advise to reach out to a French tax professional to know whether you need to pay any French taxes or file a French tax return, like a non-resident French tax return for any source income, or finding out about French tax filing thresholds. So that's something that we do have some contacts in certain countries, and our customer support team can give you, if we have contacts in, like a contact for a tax accountant in France, we can give that to you, so you can reach out to them. And then also your question, once I move to France, then do I pay taxes on the bank account savings? Well, if the question really is about US taxes, we think about you need to declare any interest income on a savings account. So your worldwide income, if you think about your US tax return, you need to declare your worldwide income, no matter where it's from. So if you're living in France and you have income from Switzerland and you're a US citizen, and you have income from a savings account in France, and you have a US brokerage account in the US, your tax return is including everything as a US citizen, so all your income. And then on your US tax return, if we go back to that slide, that foreign tax credit slide, if you have French taxes, income taxes on interest that you've paid or had withheld, then you can use that on as a foreign tax credit on your US tax return. Yeah, so Mary Catherine, let's see here. Question. Hello, I will be retiring in France next year with my parents and family. We will be receiving income from government pension plans, private pension plan, distributions from Roth IRAs, and investment accounts. How will tax treatment differ for each one of these income streams? Will I be taxed both in France and the US? Wow, that's a lot going on there, Mary. So, and it's a great question. Yeah, so what I can say is that each type of income that you receive in retirement has different rules. So if you think just in general, yeah, we need to make sure if we don't take any benefits, no tax treaty benefits, general rule is we need to include all the income on your retirement, from your retirement. So whether it's taxable or whether you owe taxes is a separate topic. But in general, we need to make sure we have all your information, whether it's 1099-Rs for any IRA distributions. We need to get all your information about your, your French, if it's a French private pension plan. There's an analysis that we go through on our side, and we'll take care of all of this for you. There's treaty benefits available for people in France. So we'll review the income tax treaty, look at it. Is it is it a social security from France, or is it a private pension from France? And then we also, there's the tax treaty benefits that we'll look at. And a lot of times there's also the calculation of what is the taxable portion. It can be different slightly from jurisdiction. So France might say, here's your distribution. Well, on your US tax return, that foreign pension distribution might be a different amount. And it's different from just the exchange rate. I mean, it's more, there is a US tax rules are different for foreign retirement distributions. So, and if we go back just to the basic, what I mentioned in the slides, though, to kind of just get to your question, is that the income tax treaty really is in place to ensure that you're not paying taxes twice on the same income. So the income, so we kind of go back to the income, it needs to be declared, but whether you pay taxes in the US and then get a credit on your French tax return, or pay taxes in France and then get that credit on your US tax return, we will take care of all that for you, because it really does depend on the type of retirement account. So just not to take too long on that, but it's a really good question, really an important question, especially if you're going to be retiring. Congratulations to you, Mary, if that's going to be upcoming. So I'm sure you're excited. Let's see. I think Kathleen, I forgot to say I'm retired. I think we've already talked a little bit about the retirement. Karen, on Form 2555, it asks about living quarters in the foreign country. If I live in a rented house that my employer pays for, would be considered a rented house or quarters furnished by the employer? I ask mostly because I read somewhere that quarters furnished by employees would almost certainly disqualify you from being considered a bona fide resident. Well, so if you are, depends on your employment situation. If just what we would say is that if it's paid from a U.S. company, a lot of times these are, the benefits can be included in the W-2 already, so there wouldn't be anything separated. Whether it's furnished by the employer or a rented house, if you think about, if it's like from a foreign employment situation and you're getting a benefit, the benefit is income to you, just generally speaking. So you're getting this nice benefit, whether you're so it really does, in that just kind of like that initial thought is, if you're getting a W-2 from a U.S. company versus a foreign employer, this sort of depends on how to capture that on the tax return, on the 2555. So I think what I would suggest here is the bona fide residence really is kind of a separate topic from this quarters furnished by employer. That doesn't necessarily disqualify you. The bona fide residence test really is a facts and circumstances based. It's not like a bright line test where it says, if you do this one thing, you can't use the bona fide residence test. You got to go over to the physical presence test. The bona fide residence test, there's a list. It's just like a more of a, it can be, some facts and circumstances type test, but that's kind of just by itself, the quarters furnished by employer wouldn't necessarily disqualify you from being a bona fide resident. Okay, next one. What are the pros and cons of an American abroad filing jointly with a non-American spouse that is not already entangled in the U.S. tax system versus married filing separately? Great question. Pros, just thinking out loud here, higher standard deduction if you want to include your non-American spouse. If your income, let's say, for example, is either you're in a low tax jurisdiction or you're not paying, you have certain untaxed income, and the standard deduction, like I mentioned in the slides, can be helpful, certainly helpful compared to married filing separately. So that's kind of like one of the first things that comes to mind. There's other options. What we tell our clients, we'll always analyze this for you to make sure that what makes sense. You can make and like you're saying, it seems like you're familiar with this, like you can make an election to treat your non-American spouse as a US person. The cons to that, though, are once you do that, you have to include your non-American spouse's income on your tax return. And so subject to the US tax rules means if your spouse has ownership in a foreign corporation, well, that now affects the US tax return. So the con can be that there's bringing lots of more forms and compliance and potential tax implications to doing that. So we always definitely, sometimes it makes sense. Sometimes certainly does make sense to make that election, but sometimes it doesn't make sense to do that. So we'll definitely analyze that for you if you bring that up in the tax return process. Dylan, I'm looking for some general advice. My brother and I are citizens by descent, so-called accidental citizens, but have never lived in the U.S., never plan on living there. We love visiting the U.S. and being connected to our family in the U.S., but are concerned about tax implications, considering renouncing. Of note, I will be potentially high income, currently junior doctor. I also hope to invest in Australian ETFs, which are classified as, I think PFIX, maybe this is what we're acronym, foreign passive investment company, an Australian property, worried about capital gains. Anyway, around all of this stuff, or should we renounce? Yeah, I think if I think about, everything that you're saying, I will be potentially high income. So, when that time comes that, if you're thinking about, if you will have income, you need to file a tax return, and that streamlined procedure could be an option for you, Dylan. And if you want to renounce, you have to have 5 years of tax returns filed. So if you have that in your mind that you maybe someday you want to give up your citizenship, the IRS requires you to be compliant for 5 years, and you sign a penalties and perjury statement. And on that form, it's in Form 8854. You can look it up, and on our website, there's more information about that form. You do sign a penalties and perjury that you are compliant. You've filed all the forms. So we'll take care of all of the filing for you. We'll take care of all your PFIX, you mentioned PFIX, ETFs, those require PFIX. And if anybody out there doesn't know what I'm saying, PFIC is a passive foreign investment company, like a ETF or an index fund or some foreign mutual fund. So these are different from like a US brokerage account. You have US index funds or ETFs. But if you are abroad and you have these kind of pooled investment type funds, they're really important US tax filings that we need to do. We'll take care of all that for you. But yeah, great question, Dylan. Let's see here. I live in the Netherlands, retired. I live on my required minimum distribution. Is that taxed in the US or NL? Well, so yeah, without knowing all the facts, I think if you think about, I don't know all the details if you're a US citizen or if you are a US citizen, but any income from a US point of view, if you think about it, should be declared on your tax return, especially if you have withholding on that minimum distribution. So there's definitely you definitely need to file either a 1040 if you're a US person, or if you're not a US citizen and you left the US and you were on a green card and you gave up your green card, or you were just on a visa and you're just living in the Netherlands receiving US income, you might need to file a 1040-NR. Tax treaty will take care and we'll analyze that, whether you pay taxes in the US or if you pay taxes in the Netherlands and get a credit on your US tax return. So yeah, there's some facts missing in that. I don't have all the information to answer that more specifically. Let's see. I lived and worked in Japan January to March 25. I got my green card and moved to the US starting 4/1, April 1st, 2025. This means I'm a dual status resident in 2025. I received income from the Japanese company that did work in Japan through March 2025 income. Do I need to report this overseas income tax return in my US tax filing? So yeah, it's a great question. I got my green card and moved to the US starting. So basically, yeah, just thinking about the details here. I don't know all your filing status and if you're single or married, but yeah, when you're filing a dual status return, the date that you receive the green card, you think about that is a certain point in time. When you start from that, it's kind of like at that point in time till 12/31, you need to start including your worldwide income. And so the date that you receive the green card, anything before that, you still need to file a tax return, and we'll take care of that for you. But you only really need to think about it from like a US sources. So it's a great question. There is an important date that we look at when we're preparing this dual status return. But it is a distinction between filing the forms to 1040 and a 1040-NR, and then also the income, like you mentioned. If you're working in Japan and you didn't have a green card from January to March, that's not US income. So you wouldn't need to think about that for your 1040. But sometimes you would need to include, if it's like that period before you obtain the green card, if you did receive US source income, then that definitely needs to be declared on the return. Good question though. I have same question, bro. Nice. If I'm not living in the US, then I did not make any income right now from the US, but I have an I-10, so do I still need to file a return or not? Well, having an I-10 doesn't, again, thinking about what requires you to file a US tax return. If you're a US citizen or a green card holder, then you need to file a tax return, or a US resident under the substantial presence test. If you are not a US person and you have an I-10 and you don't have any income, then you would potentially not need to file a US tax return if you don't have any income. So yeah, it's a good question. Just having an I-10 doesn't necessarily mean that you need to file a US tax return. Next question from Henny. Is it true tax form 8833 acts as if you gave up US citizenship? I used it last year and was easy to use to deduct the RMD, but later read on internet that it was only used for giving up. The 8833 for everybody, it's a tax treaty position form. This is making a position on a certain type of income, whether you are a US person or not a US person. It is not anything to do with, it doesn't have anything to do with what was mentioned here, giving up citizenship. So if you gave up citizenship and you have some US income and you need to file that form, you need to file that form to get a tax treaty benefit. And we do those all the time. So those are really important forms to get right, because the IRS can definitely audit you on that stuff. So we're a couple minutes left. Maybe I can just get through a few
Andrew,
more.
just before,
What do you think, Deborah?
we need to wrap up just in the interests of time.
Okay.
Thank you very much.
Okay.
So for those of you
Yeah.
who have not had your questions answered, please just look out for our email. We will be sending you an email to answer the questions that you have submitted today and at registration. For those of you who are trying to use the QR code, you were mentioning that it's coming up as deactivated. We do have a link for you. That's taxesforexpats.com/client/new. So that's taxes for expats, as you can see on the screen.com/client/new. That will also take you to our sign up page. Please don't forget to sign up. You've got that $50 credit that you can use in order for you to get $50 towards your tax filing. We look forward to assisting you with any questions, with these questions that have come through. Really great questions today. Andy, I'm sure you can agree. And yes, it's been fantastic. Thank you very much. So for all of you who are on, I hope you've enjoyed it. I hope you've enjoyed the session. We will be in touch shortly. Please look out for those emails, and we hope to be working with you to make your tax filing easy. Thank you. Thank you very much. Thanks, Andrew.
Thank you, Deborah. Bye, everyone.
Bye-bye.